Alright, so hello everyone. I hope you guys are doing okay. So today we're just gonna do a review session for exam number 2. So I have prepared review notes here. So it's gonna be like last time when we did it. I'm gonna list out a few topics that you guys want to pay more close attention to in preparing for the test. As well as I prepare a list of practice problems that we're gonna do together later on in the sessions. So so hopefully this practice section is gonna help you guys to prepare for the exam as good as possible. So alright, so let's start. So before we actually dive into the section, let's talk a little about the test. About the format of the test. So the test is going to be multiple choice like last time, and it's going to contain 30 multiple choice questions, both conceptual questions and problems. So you're going to have to prepare for calculators. To work on the problems, and then I will allow a 3x5 note card, a cheat sheet, and I hope you guys will follow that. It's supposed to be a closed book exam, but since I don't know how to proctor you guys because it's going to be an online test. I hope that you guys are going to follow my instruction and just use the 3x5 note card that I allowed you to use, and then don't use your book and your other materials. But yeah, so with that being said, I know it's hard to enforce this policy, but I trust you guys. I trust your ethics. So yeah, so that's that. So yeah, so the test is 1 hour and 15 minutes, and the test is going to be available on Blackboard, and I will provide more detailed information on how to access the test. Once the test is available online on Blackboard, I will provide you with an instruction of how to start with the test and how to do it. So make sure. So the test is going to be on Thursday, April the 2nd, from 1 to 2:15 p.m. So the test duration is going to be our normal class time. And the reason I have to do that because I cannot have any conflicting time with other classes. So the department, the university, have instructed me to make the exam during the normal class time. So that's why we're gonna do the exam during our normal class time. So with that being said, make sure that you guys have a stable internet connection during the test. Pick a location that you're gonna have the most stable internet connection as possible. Because technically I cannot give any redo tests. And it's gonna be very hard getting permission from the department given the closed down of the city right now. So I cannot just go to the department and ask for the permission to allow you guys to redo to allow some of you guys to redo the test. And it's going to take a lot of time if it comes to that situation. So please make sure that you guys have stable internet connection for your test, for your exam. And the exam is going to be automatically timed. So make sure to time yourself wisely. And if it was a physical test, then I would maybe be able to give you guys maybe 5 to 10 minutes more time. But since this is a automatically timed test and it's online, it's very hard for me to give you guys some buffer time. So please time yourself wisely. The test has 30 multiple choice questions, so it should not be that hard, and it should not take that long to answer the test, to do the test. And Alright, so and as usual, I will give you guys 3 points of extra credits for the work for the work of the practice problems in this review note. And there are like eight problems out here, but well, if you watch this video, you're gonna know how to do it anyway. So yeah, so it's just a free point I'm giving you guys here. So I have just set up a link where you can submit your work for this review note to receive the 3 points of extra credits. So you can go to content, and here click on review of test 2, 3 points extra credits. I say please submit your work here. You can attach your work and click submit. So you click on here. I'm sure some of you may have done this already. So just click here to attach your file, and then submit. So that's how you can submit this review practice problems. And then I will probably do the same thing for the 10 points extra credits, because I promised you guys that I will give you 10 points if you submit the practice problem that I sent out before spring break, right? So I will try to do the same. I will create a submission button here similar to this one to allow you guys to submit your work on Blackboard instead of emailing me. Maybe this will be easier for you guys, and also it's easier for me to keep track. I didn't know about this option until recently, so sorry about that. Alright, so let's get back to our review notes. Alright, so this time I'm trying to be as detailed as possible in terms of the guideline for the exam. So that's why I listed a lot of topics that you may need to pay attention here. It looked way longer than last time, and it doesn't mean that the exam is going to be longer. It just means that I want to prepare you guys as good as I can, since we are not doing face-to-face and we don't have that much interactions. So I just wanted to give you more information, more detailed information, more guideline to make sure that you're going to perform well on the test. So here's some of the topics that you may want to pay close attention to. Okay, so let's start. Right, so the first one is definition of gross income. So we talked about this in chapter 5. So chapter 5, the chapter that heavily focused on discussing about gross income, about the items that we can include in gross income, and the items that we cannot include in gross income. So probably you guys should know, make sure you know what can be included and what cannot be included. Right? So for exclusion items, we cannot include in gross income. For example, non-taxable income, right? Say municipal bonds, right? Income from interest income from municipal bond, we cannot include that in the gross income, right? Because it's not taxable, right? So something like that. So make sure you know the items, which items can be included and which item cannot be included in the gross income, right? So that is that should be like a kind of like a conceptual questions. And the second item is inclusion of state income refund in gross income. So we can talk about this a little bit in chapter 5. So remember that taxpayers can deduct the state income tax that they paid, right, as a deduction, and then if later on they receive a refund from the state, right, the tax refund from the state, so then they may have to include that amount in their gross income as well, but only to the extent that the refund uh, reduce the taxpayer taxes in previous year, right? So and we discussed this in chapter 5, I believe. So just go back to chapter 5 and look for it, you know. So let me just try to make sure that it's in chapter 5. State income, refund. Yeah, so it's in chapter 5. Yeah, and we're gonna do practice problems. I think. Oh, probably not. No, I don't have a practice problems here, but we have some practice problems in the PowerPoint slide in chapter 5. So please get back to chapter 5 to do more review on this. Okay. All right. So the third item is recognize employee stock option as gross income. So we also discussed about this in chapter 5, and remember there's two types of stock option, right? So make sure you know how to know what is the difference in terms of the treatments for the two types of stock option, you know. And I think I prepare the practice problems down here. Yeah, here, more than one. So we're going to talk about this in a little bit, right? All right. So capital gain and loss, and what I want you to focus on what I want you to make sure you guys know how to do is the netting process, right? So remember, there's like a 3-step process that we need to do to reconcile capital gain and losses, you know. So we have to reconcile short-term capital gain or losses, and then long-term capital gain or losses, and then the third step is to find the net of the two, right? If we have, for example, if we have a short-term short-term capital gain, and then we have a long-term capital loss from step 1 and step 2, and then in step 3 we have to net them together, right? So I have also prepared problems down here for us to practice. So we're going to talk about that in a little bit, but make sure that you guys go back to the chapters, to the PowerPoint slides to review about this netting process. Okay. All right. So the next item is make sure that you guys know how to calculate the income from annuities, right? And especially using the annuity exclusion ratio, right? Because, you know, I remember when someone buys an annuity investment, right? So every year this person going to receive an amount of annuity, right? So we need to use this annuity exclusion ratio to figure out the portion of that annuity that can be considered as the capital that the person invested in, and then the portion of the annuity amount that can be considered as net income, right? So yeah, so make sure you guys know how to use this exclusion ratio, and I think we're going to have a practice problems down there as well. All right, capital loss as for AGI deductions, you know. So remember, after the capital gain netting process, right? If the taxpayers end up having a capital loss, you know, it doesn't matter whether or not it's a long-term or short-term capital loss. If it is just if they have a loss, then automatically they can deduct up to $3,000 under 4 AGI deduction rate. So yeah, so make sure you guys review that as well, and then make sure that you know the 3 hurdles for passive income loss deduction. You know, remember there's a tax basis hurdle, there's a at-risk hurdle, and then there's a passive loss hurdles, right? So make sure you know how to identify the allowable amount of loss, and that can be deducted, you know, using these 3 hurdles, right? And also remember that even if the taxpayers passes all the 3 hurdles, there's a limitation on the amount of loss that they have to that they can deduct, right? So the limitation, the cap is $255,000 for all others, for all taxpayers, except for my friend jointly, where the limitation is $510,000. So all of that is in chapter 5. Right, so please go back there to review. Right. All right. So and then make sure that you know how to account for rent, income, and losses, for the second home, right? And then remember, there's 3 types of home, right? That we have discussed. So we have resident with minimal use, resident with significant rental use, and then the third type is cannot be considered as a resident, right? It's going to be purely for rental use, right? So remember that the second type and the third type are quite complex, So for this type, for these items, I'm not going to ask you about the other 2 types. I'm just going to ask you about the residents with minimal use, which is the easiest, the least complex scenario, So make sure you guys know what to do with when taxpayers have facing this scenario, So all right, and then make sure you know how to account for home office expense deduction, and who can qualify to treat the home office as a home office, and then if the person can treat their office at home as a home office, then how do they allocate the expense between personal use and between business use, of the expense to maintain the household, right? So, and then the next item you guys should know about is make sure you know the items that can be included in itemized items. So this is just a broad definition of itemized items. And this in chapter 7. So make sure you know the big main items, that can be included in under itemized items. All right. And then make sure that you know to identify the qualified medical expense, which is one of the major component of itemized items, right? So make sure, but not all medical expense can be included under itemized items, right? So make sure you know which items specifically can be included in the itemized items. All right. And then you guys also should know about home mortgage interest expense, like how much of home mortgage interest expense can the taxpayers included in itemized items, and also identify miscellaneous itemized items, right? So and then another thing that I forgot to put in here is to make sure you can identify the items that may not be considered as miscellaneous itemized items. So there was some item whereas previously taxpayers can include in miscellaneous itemized items, like for example like unreimbursed business expense for employees, right? So for such expense prior years, taxpayers can deduct those items, can include those items in itemized items. But now after the law change, they cannot include that in itemized items anymore. Right? So make sure you guys know some of those items. Alright, so that was chapter 7. And moving on to chapter 8. So the first thing in chapter 8 we talk about is marriage, the benefit and the penalties filing as a merit taxpayers, right? So make sure you know the benefit and the penalties in what scenario, in what situations that a merit filing jointly would generate a penalty, and in which scenario that merit filing jointly kind of generate a benefit. So it's just going to be conceptual questions, pretty basic, pretty easy. And then make sure you know how to identify the scenarios where taxpayers must pay kiddie tax. Because not all taxpayers have to pay kiddie tax, right? Only a certain individuals, right? So make sure you know what scenarios that the taxpayer need to pay the tax, right? And then we spend a lot of time talking about alternative minimum tax, AMT tax. So make sure you familiar with the formulas, and with the items within the formulas. And also make sure you're familiar with the calculation of AMT. And I think I'm gonna have one problems in the practice problems sections for us to practice. So for this topic, I don't plan to ask anything quite complex. I'm just gonna ask something very easy, and I think if you are able to do the practice problems out here, you will be able to work on the problems, to be able to do the problems in the test. So don't worry about that too much. I know we talk a lot about AMT, and the AMT section in the textbook is quite long, but I don't plan to ask anything too complex, so please don't worry. Okay, so alright, so next you guys need to be able to calculate FICA taxes for full-time employees. So remember that we spent a lot of time talking about FICA taxes. There were 3 scenarios that we discussed, right? Full-time employees, employees with the taxpayer who is both an employee of someone, right, of some company, of some employers, and or who is also have his or her own side business, right? And then that's the second case. So, and then the third case was taxpayers who is solely a self-employed person, right, who doesn't work, who is not employed by anyone, who work for him or herself. So we discussed 3 scenarios in chapter 8. But in the test, I'm just going to ask you guys about the first scenario where the taxpayers is a full-time employee of some employers. So you guys need to make sure that you guys know how to calculate the FICA taxes for these people, for these taxpayers. All right. So and then we also discuss about different type of tax credits in chapter 8. So make sure you know how to calculate child tax credits, and you already know how to calculate it, right? So it's like $2,000 per qualifying child, right? So depending on how many child the taxpayers have, how many qualifying child, it has to be qualifying child, and the child has to be under the age of 17. So it's all depending on how many qualifying child the taxpayer has, then we just times $2,000 by the numbers, right? So it's pretty easy, straightforward. And then we also spend some time discussing how to calculate American Opportunity credits. So remember, for this credit, this type of credit is for education purpose, right? So the government wants to support people to go to college. So make sure you know how to calculate this credit, and it's pretty straightforward, right? So for the first $2,000 is the first $2,000 of expenses, taxpayers qualified for for the whole $2,000, right? And then for the next $2,000, taxpayers can be qualified for 25% of whatever of the next $2,000 that they have to pay for the education. So make sure you guys know how to calculate American opportunity credits. And then the last item that we talk about in chapter 8 is about the tax filing requirements. So I'm not going to spend a lot of time. I'm not going to ask you a lot about this. Because we already talked about this quite a lot in previous chapter, in chapter 1 and 2. So I probably should going to ask you about the due dates of the filings. Something like that. So no big deal. So those are all of the topics that you may want to spend more time reviewing to be able to perform well on the test. All right, so let's move on to the practice problems. So the 8 practice problems here, and again, because this time we are not meeting and I cannot hold a physical review sessions, so I prepare more practice problems than usual to just want to make sure that you guys are best prepared for the test. So if you are able to do all of these problems in this review notes, I think you will have a good chance of performing well on the test. So alright, so let's start. So the first question, let's look at the first questions. So this question said Tom received 100 ISSOs. So this is the stock options, right? At the time he started working at ABC for ABC Corp for five years ago, when the stock price $5 per share. And each of this option gives him the right to purchase 10 shares. So if this guy exercise all 100 options that he has, he's gonna receive. He's gonna be able to buy $1,000 shares of the company. And so each option gives him the right to purchase 10 shares for the company price for $5 per share. So now that the company share price is $20. Tom intends to exercise all of his options and hold all of his share for more than 1 year. Assume that more than a year after the exercise date, Tom sells the stock for $65 a share. And assuming that his ordinary marginal tax rate is 32%, his long-term capital gain rate is 15%, the question asks, what is Tom's bargain element on the exercise date, and what are Tom's tax consequences on the date that he exercised options, basically exercise date. So remember, there are 2 types of stock option, right? So let's go back to chapter 5. So remember this, right? So there are 2 types of employee stock option, right? We have the NQOs and we have the ISOs, right? Okay. And NQO stands for non-qualified options, and ISO stands for incentive stock options. So for non-qualified stock options and for non-qualified stock options, usually the employees, the taxpayers, is taxed on the bargain element of the on the date that they exercise the option, right? However, for ISO, right, the taxpayers are not taxed on the exercise date, but they are taxed on the date that they sell the stocks, right? So and then for NQOs, when the taxpayers is taxed on the exercise date, they are taxed at ordinary rate, right? So basically it's going to be at a higher tax rate, right? But for ISOs, when they are taxed on the selling date, they are taxed. The taxpayer are taxed at the long-term capital gain tax, if they hold the stock for more than 1 year. Right? So if they hold the stock if they exercise the option, buy the stock and hold it for more than 1 year, and then sell it, then they are taxed on the selling date, right? and then on the selling date when they are the tax rate that they're gonna be that they have to pay is going to be the tax on long-term capital gain, which is 0, 15, or 20% depending on the tax bracket of the person, So yeah, so that's the main difference between these two stock options, right? But so these questions that we're having right here asking us what is the bargain element on SSI date. So remember, the bargain element is pretty much the amount of the difference between the fair market value, and the exercise price on that day, on the date that they exercise the option. Right? So basically, here the exercise price on the exercise date is $5 per share, right? Because that's what option grant Tom, right? So the option grant Tom to buy 10 share for each option for the price at $5 per share, right? So that means that is the exercise price, right? And then on the date of the exercise, right, the stock is worth $20 per share now. So the difference between that two is going to be the price that we can use to calculate the bargain element, right? So the bargain element here is going to be $20 subtract $20 subtract $5, right? So $20 is the fair market value of the stock right now, not right, on the exercise date, and $5 is the exercise price, and then times with the amount of share, right? And in this case it's going to be 1,000 share because Tom exercise all his options and he has 100 options, and each option grant him to purchase 10 shares, so that's why it's 1,000 shares. 1,000 shares. So it's going to be 15. So it's going to be $15,000. Right, so that's the bargaining element. Right. So the second question asks what are Tom's tax consequences on the date he exercised the options. Right. So remember, this is ISSO, right? This is incentive stock options. So the taxpayer is not taxed on the exercise date, right? And then instead they're going to be taxed on the selling date, right? So that because it's ISSO. But if this is NQO, non-qualified options, the taxpayer is going to be taxed on the exercise date, right? At the ordinary tax rate, right? So given that, so now we know the answer. We know the answer, right? We know that Tom, since he have ISO, he doesn't have to pay any tax on his exercise date. So it's going to be $0. So $0 tax. All right. So that was the first questions, right? So let's move on to the second problems. So the second problem is going to be focus on the netting process of capital gain and losses. Right. Sorry. Excuse me. So the question says, and has the following gains and losses: short-term capital gain of $15,000, short-term capital loss of $8,000, long-term capital gain of $3,000, and long-term capital loss of $12,000. Right. And the question asks, what is the amount and characters that and gains and losses for the year, and how much of the loss can and includes for each election, right? So for the first questions, right? So remember, now we have to do the netting process, right? So the netting process is pretty straightforward, right? So first we have to calculate based on the characteristic of the gain and losses, right? We have to group them together and net them together first, right? So first let's work on short term, right? So here we have short-term capital gain of $15,000 and short-term capital loss of $8,000. So the net of that is going to be how much? So we have $15,000. So let's short term first. So we have short term. And so how much for short term? So we have $50,000 gain and $8,000 loss. So 50,000. So 8,000. It's going to be $7,000, right? So it's going to be a $7,000 of net short-term capital gain, right? Right, because $50,000 is greater than $8,000. So now this person and has $7,000 net short-term capital gain. Right? And then long-term, we have $3,000 of long-term capital gain. And then subtract 12,000 of long-term capital loss, you know. So subtract $12,000. Should be 12,000. Subtract $12,000. Gonna be 9,000. Maybe negative 9,000. So it's gonna be a $9,000 loss. Net long-term capital loss. Right. So now, because now we have a gain and a loss rate, so now we have to move to the third step, which is to net these two amounts together. Right? We have to net short-term and long-term together. So let's say this step 1. Step 2, right. And then now step 3, we have to net these two amounts together. Right? So we have $7,000 short-term capital gain and $9,000 net long-term capital loss. So we net them together, $7,000. Subtract 9,000. It's going to be $2,000 loss. Right? Net long-term capital loss. Right, so this is our final amount, right? Right. So because this is a loss, you know, so it doesn't matter if it is a long-term or short-term. You know, the person can deduct this amount anyway under 4AGI deduction, right? But remember the cap for long-term for capital gain, the cap for capital loss. Under 4AGI deduction is $3,000, right? So in this case, Anne, her capital loss is only $2,000, so that means she can deduct the whole amount, right? The whole amount, $2,000, because it's still under the limit of $3,000, right? So Anne can include $2,000. Right, so that was because the cap is $3,000, right? So if let's say if in this case Anne has $4,000 or $5,000 of loss, then she can only deduct $3,000, and then she have to use she have to carry forward the other leftover that she hasn't used in this year, right? But in this case, since she only has $2,000 of capital loss, so she can deduct the whole amount, right? Alright, so that was number 2, problem number 2. Let's move on to problem number 3. Right, so problem number 3 it asks Emma purchased an annuity from an insurance company that promised to pay her $20,000 per year for the next 10 years. Emma paid $145,000 for the annuity, and in exchange she will receive $200,000 over the term of the annuity. So the question asks how much of the $20,000 payment should Emma include in gross income. So here we have to use the annuity exclusion ratio to calculate the portion of the $20,000 that can be included in the income, in the gross income rate. So first we have to calculate the annuity exclusion ratio rate, which is pretty much we have $145,000 here. That's the amount that she paid to acquire this investment right, and then we use our ratio, we times the $20,000 to get to figure out the portions of the portion that can be considered as her capital in the investment, right? And then the rest, the leftover, is going to be the amount that we can include in the gross income, right? So let's do this. So what do I say? Let's just type the formula. Okay, I don't know what to write here. So $145,000 divided by $200,000. Right. So this is going to be the annuity exclusion ratio rate, and then we take that amount, we times $20,000. So this is going to be $20,000 is the annual payment that Emma receives, right? So this is going to be how much? It's going to be. So this will be the 14. It's going to be for the 14,500. Right. So this is her. This is the capital. It's called capital portion, right, of the annuity. And then whatever leftover is going to be considered as the gross income, the income portion, right? So we have $20,000, subtract 14,500, which will equal 5,500. So 5,500 is going to be the income portion, and this can be included in the gross income rate. So we can include 5,500 in the gross income in this case. Right. So really straightforward. Just need to figure out the annuity exclusion ratio first, right, and then work from there. Right. So all right. So that's problem number three. So now let's work on problem number 4. So for problem number 4, so this is a question that we have to use, the three passive loss hurdles to figure out the deductible amount, right, for the loss that the person has from a passive activity in business, right? So the question says Jake purchased an interest in a limited liability company for $30,000, and then this company has no debt. Jake's share of the loss for the current year is $80,000, and in addition, Jake owns a rental property that produced $10,000 of rental income during the year. So the question asks how much of the loss is limited by his tax basis, and how much of the loss is limited by his passive loss rules. So for the first questions, we just need to figure out his tax basis in this company, right? And since this company has no debt, so the tax basis, so Jake's tax basis in the company is just going to be the amount that he invested in the company, right? Which is $30,000, right? So under tax basis, the first hurdle, under the tax basis hurdle, the taxpayers can deduct the loss up to the amount of the tax basis, right? And then since Jake's tax basis in this case $30,000, he is allowed to deduct $30,000 of his losses, right, under the tax basis hurdle, right? So, which is the very first hurdle, right? So how much of the loss is limited by his tax basis? So $30,000, right, because $30,000 is the amount that he invested in the company. Since the company has no debt, so we don't have to make any adjustments, and the tax basis is going to be exactly the amount that these taxpayers invested in the company, right? So $30,000. The second question asks how much of the loss is limited by the passive loss rules. So this is the final hurdle, right? The third hurdle. So under the passive loss rules, the taxpayers cannot deduct passive loss more than the amount of passive income that he or she made during the year, right? So basically, the taxpayer can only deduct passive loss up to the amount of passive income from some other business, right? So in this case, we know that Jack had $80,000 of loss, right? And then, however, he had $10,000 of income from another passive business, so he has $10,000 passive income, right? And so that means he can still deduct up to the amount of passive income from another business, right? From another passive business, right? So and then since the income from the other passive business is $10,000, so in this case, Jake can deduct $10,000 of loss under the passive loss rules, right? So Jake can deduct $10,000 loss, right? Because he has $10,000 of passive income. Alright, so that was problem number 4. So let's see problem number 5. So problem number 5 says, suppose that Jack invested in the partnership and assumes that supposed to be hit share. Jack is a guy. Business losses for the partnership is $270,000, and assume that the $270,000 loss is deductible under the basis, the at-risk amount, and the passive loss rules. And Jack is a single taxpayer. How much of the loss would be deductible? So remember the limitation for passive loss deduction, right? So even if the taxpayer passes all of the 3 hurdles, there's still a final limitation, right? Which is the $255,000 limitation for all taxpayers except for married filing jointly, right? So in this case, Jake is a single taxpayer, so he's subjected to the $255,000 limitation, right? So if you go back to chapter 5, I think wait, no, it should be in chapter 6, I think. It's 4 J reductions. So here, excess business loss limitation. Right. So yeah, so the limitation is $255,000 a year for all taxpayers except for married filing jointly, whose limitation is $10,000. Right. So because of this limitation, that's why our guy Jake here, Jake cannot deduct the whole $270,000, right? Even though he already passed all of the hurdles, that all of the 3 hurdles, right? But still, that's another limitation. So Jake can only deduct $255,000. Okay. So yeah, so that was because of the limitation. So he cannot deduct above that amount. Right. All right. So that was number 5. Problem number 5. Let's see problem number 6. So problem number 6, it says Kate has a regular tax liabilities of $12,475 and a tentative minimum tax of $11,500. Given this information, what is her AMT liability for this year? Right. So remember the AMT formula, right? So which is going to be chapter 8. So AMT formula. So here's the AMT formula, right? Oh no, it's still KD tax. Alright, so here's the AMT formula, right? So after we apply everything, we calculate the tentative minimum tax, right? So at this point, after we calculated the tentative minimum tax, we have to compare the tentative minimum tax with the regular tax, right? So in this case, we know that Kate had the regular tax liabilities of $12,475, and then a tentative minimum tax of $11,500, right? So to be able to calculate the alternative minimum tax, we take the tentative minimum tax, subtract the regular tax, right? And if the amount is the positive amount, basically if the tentative minimum tax is greater than the regular tax, then the taxpayers have to pay that difference, right? But if the tentative minimum tax is lower than the regular tax, then the taxpayers don't have to pay the AMT tax at all, right? So in this case, well, we know that Kate tentative minimum tax is $11,500, and then her regular tax is $12,475, right? So meaning in this case, her tentative minimum tax is lower than her regular tax, right? So in this case, tax don't have to pay any AMT at all, right? But if it was like if the case was that where if the case was Kate having $12,475 of tentative minimum tax and $11,500 of regular tax, then now in that case, then she may have to pay some minimum tax, right? Because her tentative minimum tax then is going to be greater than her regular tax rate. But in this case, right, her tentative minimum tax is smaller than the regular tax, so she don't have to pay any AMT. All right. So that was problem number 6. Let's see problem number 7. So problem number 7, it asks, Mike made $37 working at a grocery store full time. So how much FICA should Mike's employer have withheld from? Should be his paycheck. From his paychecks. Right. So here we have to calculate the FICA taxes for this guy. Right. So we know FICA taxes. There are two components. Right? There's Social Security tax and there's Medicare tax. Right. So and the discussion we have is in chapter 8. So remember, right? So for FICA taxes, that's two components, right? So Social Security tax, which taxed at 6.2%, and Medicare tax, which taxed at 1.45%, right? And then for Social Security tax, there's a cap, there's a limit, right, of $132,900. Right? So if the taxpayers make more than that, they don't have to pay any additional tax rate. So the maximum Social Security tax that the taxpayer have to pay is 6.2% times $132,900. Right. However, for Medicare tax, there's no limit. Right. So the taxpayer gonna have to pay 1.5% of whatever that they are making. So look at our case here. So Mike, he makes $30,000, right? So first let's calculate his Social Security tax. So Social Security tax. So it's $30,000 times 6.2%. How much can it be? So $60,000. Oh, $30,000. 30,000 times 0.062. Maybe $1,820. So that's Social Security tax. What about Medicare tax? Medicare tax. So we have $30,000 times 1.45%, which equal how much? 0.0145 equal $435. $435. Right. So, and since my salary is way below the limit rate, so we use the whole amount. We use the $30,000 amount to calculate his Social Security tax rate. So the FICA taxes for his is going to be the sum of these two, right? Which is going to be 1820 plus 435, which equals so it's going to be $2255. $2,255. All right. And on the test, I think I'm just going to ask a question similar to this, because I already told you I am not going to ask the other more complex scenarios. So probably I'm just going to stick with this scenario. Okay. All right. So that's problem number 7. And let's look at our last problems. Problem number 8. So it's that Jim paid $1,000 tuition and $300 for books to attend UTSA. What is the maximum American opportunity credit before phase out Jim? Jim may claim for these expenses. So remember in chapter 8 we talked about this, right? So American opportunity credit. American opportunity credit. Right. So for the American opportunity credit, the tax rate can claim 100% of the first $2,000 of eligible expenses, right, of the education expenses, and then 25% of the next $2,000. Right. So in this case, Jim paid in total of $1,300, right, for his tuition and books to attend UTSA, right? So, and it's still below the $2,000 mark here, right? So that means Jim can deduct, not deduct, but can claim the whole amount of $1,300 as a tax credit at his American opportunity tax credit, right? So Jim can claim the whole amount of $1,300 as his American opportunity credit. All right. So yeah, so that's it. That's the end of our review sessions. So yeah, so like I said, if you are able to work to do all of these practice problems, you should be able to perform well in the exam, regarding the problem portion, and if you study these topics, this list of topics, then you should be fine with the conceptual questions as well. So yeah, so this time I hope this review session is beneficial for you, and it's helpful in some way for you guys to prepare for the exam number 2. And this time I do provide more information. I do basically disclose more information about the test, so that you guys can best prepare for the test, So yeah, so I hope you guys can do well on the test, And remember what I said in the beginning of the video, right? The test is going to be available on Blackboard. It's going to be for 1 hour and 50 minutes, right? And make sure that you have a stable internet connection. You know, that is very important. Make sure that you have a stable connection to sustain you through the whole 1 hour 50 minutes of the exam. You know. All right, and well, I already provide the answer here, but if you want three points of extra credit for the test, then you can submit your work in here, right? Like I showed you. Right, just attach your file and then submit. Right. And then yeah, and then I'll try to create another thing, similar thing for the 10 points extra credits assignment. You know, so you guys can submit it on Blackboard. It's going to be easier for you guys. You know. All right, so yeah, so let me know if you have any questions. You know, and good luck with the test. I hope you guys going to do well on the test. You know. All right, take care.